So here we are going to start in continuation of audit revision. Going concern as per SA 570, as per SA 701 key audit matter, as per SA 706 emphasis of matter paragraph, as per SA 706 other matter paragraph. This is one and the same. You can let me give just an introduction. You can watch this revisionary series into 1.5x speed or 2x speed. This is revisionary notes, and will cover the whole audit by taking it into smaller topic or chapter wise revisions. Okay, so this is a basic concept part which we are understanding or revising. The next topic is responsibilities of the management for the financial statement. SA 210, which describe the management's responsibility for preparing the financial statement in accordance with the applicable financial reporting framework and for such internal control as management determine is necessary to enable the preparation of the financial statement that are free from material misstatement, whether due to fraud or error. And second is assessing the entity's ability to continue as a going concern as per SA 570 and whether the use of going concern basis of accounting is appropriate, as well as disclosing if applicable matters are relating to going concern. This is the responsibilities of management while preparing the financial statement. Second is auditor's responsibilities for the audit of the financial statement. It shall cover state that the objective of the auditor are to obtain a reasonable assurance about whether the financial statement are free from material misstatement, whether due to fraud or error, and issue an auditor's report that includes the auditor's opinion. Second is a state that reasonable assurance is a high level of assurance, but it is not a guarantee that the audit conducted in accordance with the SA will always detect a misstatement when exists. Third is state that misstatement can arise from fraud or error and provide a description of materiality or explain when they are considered as material. And fourth is describe that auditor exercise professional judgment in planning and performing audit as per SAs. Fifth is auditors need to describe an audit by explaining the auditor's responsibility to identify and assess the risk of material misstatement, whether due to fraud or error in financial statement, to obtain the understanding of the internal control, to evaluate the appropriateness of the accounting policies, and to conclude on appropriateness of the management use of going concern basis of accounting. And the sixth point is also explain that auditor communicate with the TCWG matter described as per SA 260, those charged with governance. Now, next topic is report on legal and regulatory requirements. Read with section number 143 of the Companies Act 2013. If the auditor addresses the other reporting responsibilities in the auditor's report on the financial statement that are in addition to auditor's responsibilities under the SAs, this other reporting responsibility shall be addressed in a separate section in auditor's report. And the last part of the auditor's report is signature. The report is signed by the auditor. It means the engagement partner in his personal name. Where the firm is appointed as the auditor, the report is signed in the personal name of the auditor and in the name of the audit firm. The partner or a proprietor signing the audit report also need to mention the membership number signed by the Institute of Chartered Accountants of India. They also include the registration number of the firm wherever applicable as allotted by the ICI in the audit report signed by them. Next, the next topic is report on legal and regulatory requirements. Read with section number 143 of the Companies Act 2013. If the auditor addresses the other reporting responsibilities in the auditor's report on the financial statement that are in addition to auditor's responsibilities under the SAs, this other reporting responsibility shall be addressed in a separate section in auditor's report. And the last part of the auditor's report is signature. Also, place and date to be mentioned. The auditor's report shall name a specific location, which is ordinarily a city where the audit report is signed. And the auditor's report shall be dated no earlier than the date on which those with the recognized authority have asserted that they have taken a responsibility for those financial statements, and the auditor has obtained sufficient appropriate audit evidence. Now the basic concepts are over, and we'll start with the chapter-wise discussions of the standard on audit. First, we will finish the essays given in ICI module. We'll start with the chapter number 11. It covers the concept of ethic, essay 210, and quality control standard SQC1 and essay 220. Essay 210, terms of audit engagement, code of ethic, need for professional ethic. The purpose of the assurance engagement is to enhance the confidence of the intended user. A distinguishing feature of the accountancy profession is its acceptance of the responsibility to act in the public interest. Service user of the professional should be able to feel secure that there exists a framework of the professional ethic which governs the provision of those services. So this is a need for professional ethic. Now there are two types of codes of ethic: principle based approach and rule based approach to ethic. First is the essence of principle based approach is to ethic is that requires a compliance with the spirit of ethic. Rule based approach to ethic strictly follow clearly established rules. It is a rigid as it may not be possible to deal with every practical situation relying upon the rules. Therefore, it is necessary that the spirit of code is followed. Now, the next topic is fundamental principle of the professional ethic. There are 5 principles. First is integrity, objectivity, confidentiality, professional competence, and due care. You can use the memory technique as bio PC. Professional behavior B, integrity, objectivity O, professional competence and due care C, and confidentiality for C. Bio PC. Integrity shall not knowingly be associated. Integrity means shall not be knowingly be associated with the report, returns, communications, or other information, whether the accountant believes that the information contained a materially false or misleading statement. Otherwise, it will question the integrity of the auditor if he is involved in all this materially false or misleading statements. Second is objectivity. Not to objectivity means not to compromise professional judgment because of the bias, conflict of the interest or undue influence of the others. Third is confidentiality. The information will not be disclosed to a third party. However, such a confidential information may be disclosed, for example, when it is required by law, when it is permitted by law, and is authorized by the client or employer, or there is a professional duty or a right to disclose when not prohibited by law. Then only you can disclose the information to a third party. Otherwise, you have to maintain the principle of confidentiality. Fourth point is professional competence and due care. It means to attain and maintain a professional knowledge and skills at a level required. And fifth is a professional behavior, means to comply with the relevant laws and regulation and avoid any conduct that the accountant knows or should know might discredit the profession. Now, the concept of independence. Independence is not accurately defined because it is a state of mind. It means maintaining an uninfluenced state of mind. As per the International Federation of Accountants, explains independence as independence of mind and independence of appearance. Independence of mind, auditor's own evaluation whether he can form an opinion without being influenced by the auditee, it means the client. And independence of appearance, so whether there are facts or circumstances which can make a third party conclude that the auditor's independence has been compromised. So auditor needs to take care of both the things, independence of mind and independence of appearance. Now there is a threat to independence. This is the memory technique, sacred safe. Okay. Threat to independence are self-review threat, self-interest threat, advocacy threat, intimidation threat, and familiarity threat. We'll understand, we'll revise this in detail. Threat to independence. First is a self-interest threat. Auditing firm, its partner or associate could be benefit from a financial interest in an audit client. Wherever a financial interest word comes, you have to recall it with a self-interest threat. Self-review threat, fear of exposing on errors, a review of any judgment or a conclusion reached in previous audit or a non-audit engagement. When a member of the audit team was previously a director or a senior employee of the client. Third is advocacy threat. When the auditor promotes or is perceived as seen by the third party to promote a client's opinion to a point where people may believe that the objectivity is getting compromised. It means that, for example, auditor giving a legal advice to the same client. So, advocacy threat can exist there. Fourth is intimidation threat. When auditors are stopped from acting objectively with a professional skepticism, it could be due to threat of replacement as a result of the argument with the clients. And fifth is familiarity threat. When auditors form a relationship with the client where they end up being too sympathetic to clients' interests, or when there is a hospitality or exchange of the gift, then you can't say anything bad about them, so it will develop a familiarity threat. How to deal with the with this threat? So we have a safeguard to independence. There are safeguards in the form of the statutory provision mentioned in Companies Act 2013 and Chartered Accountant Act 1949, which help the auditor in maintaining its independence. It means how auditor can protect its independence against the threat explained earlier. Apart from this statutory provision, auditors should also follow the following guiding principles in this regard. First is auditor should always be appear to be independent. Second is the key fundamental principle of the integrity, objectivity, and a professional skepticism can be fulfilled only if the auditor remains independent. Before accepting the audit, he must consider whether there is any threat to his independence, and if such threat exists, then he must apply safeguard and eliminate such threat. If the threat cannot be eliminated and the auditor believes that he may not be able to maintain his independence, then he shall not accept such he shall not accept such audit. Now the next topic is Essay 210, agreeing to the terms of the audit engagement. What is the objective or the purpose of the Essay 210? It means to accept or continue an audit engagement only when the basis upon which it is to be performed has been agreed through. First is establishing the precondition for an audit are present or not, and second is confirming that there is a common understanding between the auditor and the management, and where appropriate those charged with the governance. Now, the what are the preconditions are determine whether the financial reporting framework is acceptable or not. It means the basis upon which the management prepared the financial statement is acceptable or not. Second is obtained the agreement of the management that it acknowledges and understands the premise based upon which the audit conducted. Preparation and presentation of the financial statement are as per applicable financial reporting framework. Internal control as management consider necessary, and providing access and information to the auditor required for the purpose of his audit. If the precondition do not exist, then auditor cannot accept the audit unless otherwise required by a law or regulation. SA 210, agreeing to the terms of the audit engagement, letter of engagement. 2. The management or TCWG. First is objective and scope of an audit with reference to the applicable law governing the audit. It means Companies Act 2013. Second, he needs to mention letter of engagement includes first is objective and scope of the audit, second is auditor's responsibility, third is management responsibility, fourth is applicable financial reporting framework, and fifth is expected form and content of the audit report to be issued, and statement that, and in the last from auditor. Recurring audit. So this engagement letter of engagement, auditor gives to client. This engagement letter is issued by an auditor to an client or entity. As we know that if auditor is an individual person, he can be appointed as an auditor for 5 years, and if the firm is doing an audit, then 10 years with a set of 5 years, 2 sets of consecutive years. So auditor can do audit for of an entity for 5 years only. Okay, so in that, if reoccurring audit, it means second year onwards with the same client, then auditor need not revise the terms of audit engagement unless the circumstances required him to do so, and if there is a need to remind the entity of the existing terms, it means to clear the misunderstanding. Now, when such circumstances arises, okay, for example, significant changes in law, management, nature of a business, ownership, reporting requirement, etc. Now, if changes in the terms of audit engagement, if before the acceptance of the audit and if it is after the acceptance of audit, both have a different situation. Changes in the terms of audit changes in the terms of engagement before the acceptance of audit, if suggested changes may lead to limitation on scope of audit, then auditor must not accept such a audit unless required by law and regulation to do so. It means auditor won't be able to form an opinion on financial statement due to lack of evidence, right? And in second situation, there is a change in terms of engagement after acceptance of audit. So is there a reasonable justification? If yes or no, valid reason for changes is there, accept the change in writing, and invalid reason for the changes, then do not accept such change. In both the situation, if management and TCWG do not allow the auditor to continue with the original terms, then withdraw from the engagement if it is legally permissible to do so. And in order to avoid the confusion, the audit report would not include reference to the original engagement and any procedure that may have been performed in the original engagement. Next is, now here our essay 210 got completed. Now we'll move to second quality control standard SQC1 and essay 220. Quality control SQC, what is the difference between the SQC1 and essay 220? The only difference is essay 220 is applicable to standard on auditing, and SQC1's quality control standard applicable to all other engagement. It is not only limited to auditing engagement. So we'll revise the difference. Okay, SQC1, responsibilities of the CEO or a managing partner to design and implement the quality control policies and procedure related to them, following the elements of the quality control. Elements of the quality control: leadership responsibilities for the quality within the audit, ethical requirement, acceptance and continuance of client relationship and engagement, human resource policies and procedure, engagement performance and monitoring. SQC1 is applicable in essay, standard on auditing, standard on review engagement, standard on assurance engagement, and standard on related services. All engagement covered under such standards, right? And essay 220, responsibilities of the engagement partner to implement quality control policies and procedure of the firm in each audit engagement to which that partner is assigned. Objective is to obtain a reasonable assurance whether the here responsibility of the engagement partner, that means an auditor, to implement the quality control policies and procedure of the firm in each audit engagement to which that partner is assigned. Objective is to obtain a reasonable assurance whether the audit engagement is complying with the professional and a legal standard, and the audit report issued is appropriate or not. Right, now we'll revise elements of quality control in detail. First is leadership responsibility. Leadership responsibility for SQC1 for quality within the firm and for quality within the audit. Leadership responsibility: CEO or a managing partner shall assume the ultimate leadership responsibility for the quality within the firm. All the policies and procedures shall be designed to keeping in view the following consideration: that quality should be greater than a commercial consideration. Operational leaders shall have appropriate competence and capabilities. Resources should be devoted to quality control and demonstrate the commitment to quality while implementing all policies and procedure. And leadership responsibilities for SA 220 for quality within the audit. Engagement partner shall be responsible for quality of each audit engagement assigned to him. Actions and message of the engagement partner shall emphasize upon compliance with the professional and legal standard, compliance with the firm's quality control policies and procedure, appropriateness of the audit report, and team's ability to raise a concern without a fear. And second is, quality is essential in audit engagement. Second element is ethical requirement. Ethical requirement in SQC1, firm or the CEO or a managing partner shall establish policies and procedure to ensure firm's personnel comply with a relevant ethical requirement, which a compliance towards the fundamental principles should be emphasized by spread awareness, process for dealing with non-compliance, action of the firm's leadership and monitoring, and independence policies and procedure. Independence policies procedure Design policies and procedure to comply with independence requirement in all assurance engagement. Communicate such policies to the firm's personnel, identify the threat to independence, and develop a mechanism to report such threat to independence. Obtain annual confirmation from all assurance team that they are complying with the firm's policies and procedure on independence and familiarity threat in case of a listed companies or a listed entities. Engagement partners shall be rotated at least once in a 7 years. Okay. And for SA 220, responsibility of the engagement partner to monitor the compliance with the ethical requirement in each audit engagement to which that a partner is assigned, identified the threat to compliance with the ethical requirement, and to report the appropriate person within the firm to determine the appropriate actions. Now, the third element is acceptance and continuance of the client relationship and engagement. For SQC1, firm shall establish policies and procedure to determine the client engagement acceptance. In that, factors to be considered. Factors are: evaluate the integrity of the client, analyze the nature of the business, reputation, past history of the client, etc. Evaluate the firm's resources and capabilities, knowledge, experience, skills, and ability of the firm. Evaluate the compliance with ethical requirement, no conflict of interest, independence, etc. Client engagement continuance, re-evaluate that limitation on scope of audit, if any, imposed by management and TCWG. Firm shall also establish withdrawal policies and procedure that are to be followed in case of withdrawal from the engagement or a client. This is the acceptance and continuance of the client relationship and engagement element. And for SA 220, engaging partners shall review the information of the client or engagement obtained from the firm's policies and procedure. Engagement partners shall determine whether the conclusion reached in regarding acceptance or continuance are appropriate or not, and in case of any adverse finding, engagement partners shall report to appropriate person within the firm to determine the appropriate actions. Okay. Also, SQC1, there is a one part, withdrawal policies. So, withdrawal policies and procedure. Discuss the matter with the appropriate level of the management and TCWG. It means those charged with governance. Consider and fulfill the professional and legal responsibilities for informing the stakeholders about the withdrawal from the engagement and documenting a significant discussion during the withdrawal stage. Fourth element is human resource. Quality control standard. Human resource. A firm should establish policies and procedure for its human resource management. These policies and procedures should address the following issue: competence, capabilities, career development, and compensation. C4P2RE. Performance evaluation and promotion. P2. R. Recruitment, and E. Estimation of the personal need. These are the issues which the firm need to address through the policies and procedure. Fifth is engagement performance. Engagement performance of SQC1, policies and procedure to be brief engagement teams. Policies and procedure to undertake the appropriate consultation on difficult matter within or outside the firm. Engagement documentation, difference of opinion resolve as per the firm's policies and procedure. And engagement performance for SA 220. Engagement partner shall direction, direction, supervision, and review the work performed by the audit team member. Consultation. Engagement partner shall determine whether there is a need to obtain a consultation, and this is EQCR, engagement control. Sorry. So EQCR means engagement quality control review. EQCR, here we were this is not SP, this is AP. Okay, engagement partner shall determine whether the EQCR, it means engagement quality control review, has been appointed, reviewer has been appointed, and engagement partner shall not date the auditor's report till the completion of engagement quality control review. And the last element is monitoring. SQC1 monitoring. CEO or a managing partner shall ensure that the firm's policies and procedure are relevant, adequate, and operating effectively. Factors to be considered in determining the monetary policy: incorporation of a new development, dealing with a complaints and allegation, and appropriate remedial action to be taken. And as per the SA 220, monitoring element is engagement partner shall evaluate the result of firm's monitoring process and take a necessary corrective actions. It means updating the audit procedure. So all the elements of the quality control standard has been completed. Now the next is engagement quality control review. This is an additional review in addition to the review done by the engagement partner of the significant judgment made and conclusion reached by the audit team. Who can conduct an engagement quality control review? A CA, partner of the firm other than the engagement partner, any other suitably experienced person, it means CA of the firm, a suitably qualified external person, that means external person outside of the firm, it means CA in practice, or a team of individuals of the firm headed by CA. This all people can conduct engagement quality control review. Role of the engagement quality control reviewer is to review of the draft audit report, review of significant judgment and conclusions made by the auditor, review of selected documentation which is significant, discussion with the engagement partner on a critical areas, whether appropriate consultation was taken on a critical areas, and evaluation of the independence of the audit team. Now, SA 220, quality control for an audit of the financial statement. An engagement partner taking over an audit during the engagement should apply the review procedure in order to review the work performed to the date of a change in order to assume the responsibilities of an engagement partner. This is a one module question. will go through it. So the question says, Suresh Chandra and Company has been appointed as an auditor of SC Limited for the financial year 2014 and 15. CA Suresh, one of the partner of the company, completed the entire of the firm. Let me just use a word for this firm. CA Suresh, one of the partner of the firm, completed entire routine audit work by 29th of the May 2015. Unfortunately, on the very next morning, while going towards the office of the SC Limited to sign the final audit report, he met with a road accident and died. CA Chandra, another partner of the firm, therefore signed the accounts of the SC Limited without reviewing the work performed by the CA Suresh. This is wrong. CA Chandra needs to first review the work performed by the former partner. So the two main points in this question is, first is the basic principle of the audit and the concept of SA 220 as discussed. Okay, first is one of the basic principles which govern the auditor's professional responsibilities and which should be complied with whatever an audit is carried. It is that when auditors delegate work to assistant or uses a work performed by other auditor and expert, he will continue to be responsible for forming and expressing his opinion on the financial information. However, he will be entitled to rely on work performed by the others, provided he exercise adequate skill and care and is not aware of any reason to believe that he should not have so relied. All right. Now the next is chapter number 4, 7, 6 and 6 essays: audit evidence, completion and review, and audit documentation. So chapter number 4 is audit evidence, chapter number 7 is completion and review, and chapter number 6 is audit documentation. So there are 15 essays in these 3 chapters, and we will continue this in next revision series. Okay, thank you.